But then, like Dan Ives, he's probably the most bullish person on Wall Street, and he certainly sees upside in the stock. And I agree with that. I think eventually the analysts will get on board with it. Maybe they won't. I don't know. But in the end, that just means volatility. Right now, the trend is up. When the stock is down, it's usually a good time to buy it.
Volatility, growth, and valuation. Did you know that Palantir has had some roller coaster moments in the stock market recently? After its latest earnings report, opinions about its future are split. On one hand, some analysts see potential for growth, while others are concerned about its valuation. So, what's the deal with Palantir stock?
So analysts still see Palantir as a golden buying opportunity. What's your guys' take on this? What side are you on with that?
Yeah, I tend to agree with where the analysts are going from a long-term standpoint. Dan Ives of Wedbush, he was the person that said Palantir is the Lionel Messi of AI. And before the earnings, he had reiterated his buy rating on the stock. He gave it an overweight rating with a $35 price target. He described the results yesterday as like you were just saying, Lacey, as a golden buying opportunity for investors. It's a lot of this has to do with their AIP platform and the boot camps that they're using to gain customer share right now.
Earlier in May, Palantir Technologies faced a significant downturn following its earnings report, causing its stock to plummet to the low $20s per share. Since then, Palantir's stock price has remained stagnant at this lower level. This slight decline in price may not seem alarming, but it's certainly frustrating for investors who find themselves at a loss or have held onto their positions for some time. Adding to the frustration is the ongoing debate among analysts and investors regarding Palantir's perceived high forward valuation. Coupled with broader macroeconomic factors, many market participants view Palantir as having limited downside potential and uncertain upside prospects. However, it's essential to recognize that the future trajectory of Palantir's stock is not predetermined. Currently, interest rates are expected to remain stable, and there are indications of a slowdown in the U.S. economy. Consequently, investor enthusiasm for AI stocks, including Palantir, has waned. In this context, Palantir stock appears to be stagnating, reflecting broader market trends in the AI sector. Despite this, pessimistic views on Palantir's future abound. Some skeptics argue that the company is at risk of a significant price correction, even if it meets expectations. With a current valuation of 65.6 times earnings, merely meeting forecasts may not suffice to sustain Palantir's stock price. There are also overlooked insights that could offer a silver lining for potential investors eyeing Palantir stock. Despite the lackluster response to its recent earnings update, digging deeper reveals some promising signs. For instance, while the guidance tweaks may have disappointed, key performance indicators hint at significant growth potential. Metrics like remaining deal value and signed deals surged, overshadowing the uptick in commercial sales. Additionally, Palantir's strategic shift towards profitability, even amidst heavy AI platform investments, suggests a balancing act that could lead to surpassing earnings forecasts in the coming years. The market seems to be missing these crucial takeaways, presenting an opportunity for savvy investors to position themselves ahead of potential market sentiment shifts.
Obviously, as you can see now, even despite today's losses, it's trading above $22 a share. RBC also kept an underperform rating, but raised its price target to $9 a share, quite a bit lower than where it's currently trading. Deutsche Bank is still bearish, but raised its price target to $20 a share. Meanwhile, D.A. Davidson pointed to persistent strength in the U.S. commercial business, maintained a neutral rating, but raised its price target to $24 a share. And then Dan Ives over at Wedbush, who's bullish on the stock, said, "We believe any modest sell-off post-print is a golden buying opportunity for this pure play AI name." So reiterated his outperform rating and $35 price target on shares, and looks at this sell-off as a buy.
You know, I got to say, I kind of err on the side of Dan Ives for this one. I'm surprised that there's so much negativity in the analyst community.
Now, let's take a closer look at Palantir's impressive growth and cash flow scaling. In the first quarter of 2024, the company's sales reached $634 million, marking a robust 21% year-over-year increase. A significant driver of this growth was the demand for Palantir's custom AI platform, AIP, particularly evident in the U.S. commercial sector, which saw a whopping 40% sales surge to $150 million. This surge was fueled by a remarkable 69% increase in new customer accounts, underscoring the appeal and competitiveness of Palantir's services. Palantir's strong performance isn't just reflected in its sales growth and free cash flow. Despite a slight dip in margin from the previous year, the company still managed to generate a substantial $148.6 million in adjusted free cash flow in the first quarter of 2024. Palantir anticipates its free cash flow to soar even higher, projecting up to $1.0 billion in 2024 based on sales ranging from $2.68 billion to $2.69 billion. This suggests a promising free cash flow margin of 30 to 37%, showcasing the company's profitability and financial strength moving forward. However, some investors remain wary of Palantir's valuation despite its growth and profitability. One major concern is its high stock-based compensation expenses and its lofty valuation based on sales and free cash flow. At a market valuation of $46.7 billion and forecasted sales of $2.685 billion for the year, Palantir's sales multiple stands at 17 times, which many consider overvalued. This becomes even more apparent when compared to established software giants like Microsoft and Oracle, which boast lower sales multiples despite slower growth rates. Furthermore, Palantir's free cash flow multiple is deemed excessively high, reaching 47 times based on its estimated $1.0 billion in free cash flow for the year. While achieving profitability is a significant milestone for the company, some argue that a 47 times multiple is unjustified given its historical losses and relatively short track record of profitability. A more conservative estimate suggests a fair price of $9 per share, highlighting the potential for a significant correction. Reinvestment, confidence, and growth. But what does it mean when a seasoned investor like Stanley Druckenmiller re-enters the Palantir stock arena? Druckenmiller, renowned for his astute hedge fund management, commands attention with his investment moves. After selling off his entire 700,707 share position in Q2 2023, his fund, Duquesne Family Office, revealed a notable shift in strategy by picking up 769,965 shares of Palantir during the first quarter of 2024, constituting 0.4% of his 13F portfolio. This move marks Druckenmiller's return to Palantir after initially investing in the company in Q1 2021 following its IPO. While his current stake is smaller than his initial investment, it's a noteworthy indicator of his confidence in the company's trajectory. Druckenmiller's investment style, characterized by short to medium-term holdings with an average tenure of 2.29 quarters, suggests a calculated approach to capitalizing on market trends. Although Druckenmiller's allocation to Palantir is relatively modest, other investors are doubling down on their bets. Notably, Keywise Capital leads the pack with a 20.02% allocation to Palantir, followed by Cypress Point Wealth Management at 18.18% and Primavera Capital Management at 16.76%, despite concerns surrounding Palantir's valuation, highlighted by an average price target of $20.54 among 18 analysts. Indicating a potential downside of approximately 6%, the stock has surged over 30% year-to-date, buoyed by strong Q1 earnings performance and revised revenue guidance for 2024. Volatility, overvalued, growth. So, should you buy Palantir stock? The company's growth trajectory is impressive, boasting a solid rate of more than 20%, indicating a positive outlook. However, its high volatility and valuation present significant hurdles. To consider investing, the price would need to drop substantially. While Palantir holds potential for long-term gains, its current valuation is steep, suggesting it may take time to justify. There are likely better-priced growth stocks available for investment. Palantir's first quarter performance was commendable, yet market sentiment drove the stock down after the earnings report. Despite improvements in free cash flow, concerns persist regarding its sales and free cash flow multiples. Given the underlying financials, the current valuation appears unjustified. Viewers are encouraged to conduct thorough research and due diligence before making any investment decisions. With Palantir's uncertain valuation and financial metrics, it's crucial to weigh the risks carefully. Is Palantir worth the investment at its current price? Share your thoughts in the comments section below. If you enjoyed this video, you may also like our hand-picked, action-packed newsletter about Palantir. Subscribe now at wiseinvesting.com. And that's it. Make sure to smash the like and subscribe buttons down below. Additionally, if you want to know about Palantir stock, just click this video right here. Thank you for tuning in, and stay tuned for more exciting content in the future.